So, as we have it so far, last week was absolutely phenomenal. We had a net return of 4.73%, which is absolutely bloody brilliant. It really is. Given this first week back as well, I mean, on Monday I was a little bit sort of apprehensive, I suppose, in my approach to the markets. Thought I might have to, take a little while to get back into the swing of things. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now session, where we're going to dig into the market reports and have a look at what's going on this week. It is, as you may well know, CPI week for the United States, so it's going to be a big one. Hopefully, it's going to be pretty volatile, I should imagine. But anyway, before we get into all that, hope everybody is doing well. I know there's going to be a group of you on the inside, a group of you on the inside later on this afternoon, and then everybody viewing this on YouTube over the course of the next 24 hours and possibly even further down the line. Good afternoon to you all. Hope you're all doing extremely well today and had a nice weekend break as we embark on the second half properly of the year, the final half, and into the colder season. Although today it's actually still pretty bloody warm out here in London at the moment. Actually, sky's blue, sunny, and it's pretty damn warm in the office. So I can't say it's the cold season yet. Good afternoon, Cortim. Good afternoon, Jack. Good afternoon, Nadia. Good to see you, team. Jack sending in a trading opportunity straight away for the review. Let's have a quick look. Euro CAD, solid structural break point, probably would have the break of structure slightly lower. So look to have your zone covering the bottom of the wicks and then run it across. So your risk reward, so your entry would probably be a little bit below where it is at the moment. Your stop loss a little bit below where it is at the moment, and just move the entire thing down, looking to target around, the top of the zone that you've got down below. So 160, 110, maybe. I don't know exactly what it would be. But everything looks really good. The whole entire thing just needs to be shifted down ever so slightly. That's what I would say about that. All right, team, let's dig into this market report then, work our way through the data, see what we've got going on for the week ahead, and then we can break down our US indices for this afternoon's US trading session. So, as we have it so far, last week was absolutely phenomenal. We had a net return of 4.73%, which is absolutely bloody brilliant. It really is. Given this first week back as well, I mean, on Monday I was a little bit sort of apprehensive, I suppose, in my approach to the markets. Thought I might have to, take a little while to get back into the swing of things. Was still feeling quite tired, to be honest, from all the miles that I'd done. But to be honest, I mean, the real results would show at the end of the week. It was a fantastic week. We actually had a 2.7% day, I think it was, on the Tuesday, which again, just ridiculous. It's really, really good. And everything went well from that point on, to be honest. I mean, the Wednesday we had a 0.2, I think Wednesday was about 0.35 or maybe 0.36% down as a drawdown day on the Wednesday. And then the Thursday and Friday were both big days as well. We had a 1.6% day on the Thursday and then ended the week with a 0.72% day on the Friday. So not too bad at all. Now, in terms of the portfolio breakdown, Forex indices and commodities, it was pretty balanced, I would say. Forex 32, indices 52, and commodities wrapping up the final 16%. there. The major profits were taken from the indices markets, though. If you recall, the FX markets were quite mixed for us. We still ended the week in the green in FX alone, but it was a bit mixed. We had a few losers. Our longer term range continuation opportunity in the Aussie CAD actually spiked up and hit stop loss on that one. That was on Friday as a result of the NFP at about 1:35, I think, 2 o'clock. So there was that to contend with as well. But yeah, for the most part, it was all right. It was fine. So to date, we are just shy of 112% up this year. I don't think any words need to be said about that. It's just pretty damn good. Monthly average is 13.9% with a weekly average of around 3.1%, and that's over the course of 39 weeks. We're in our 39th week at the moment. Looking at the trading volume down here, obviously August showing hardly anything at all, and that's predominantly because it's holiday season for us here at the UTC. September, we're almost already at August's number of trades just in the first week. We did execute quite a few positions last week. I believe it was 18. I think that's where we finished in terms of the trading volume last week. So we were pretty active. I mean, we didn't take any trades on the Monday as well. So that's actually just across the 4 days from Tuesday until Friday. And Friday middle of the day was a bit difficult for me personally because of first week back to school stuff with my children. So yeah, it was a bit hectic towards the end of the week, but we still managed to smash out a lot of trades regardless, and that was good. Now, heading down to the compare the funds with industry averages here, 4.73%, which is our return against the S&P and the UK FTSE. It was a pretty bullish week across the board, as you'll see. S&P was up 2.62% by week's end. UK FTSE closed at a profit of 1.63% as well there, or a growth, of 1.63%. So it was quite bullish across the board. And when generally speaking, if the indices have a bullish week, the fund performs relatively well as a result of that as well. So as we move down into market trends and opportunities, then we've got packed out this week with some pretty decent stuff. Predominantly gold looking insanely good at the moment. Huge rally up, and we did get that break, close, and retest of the major point of liquidity. But I am this week expecting there to possibly be a deeper corrective, and for the move from up here to come back down to the liquidity zone below before getting the continuation back up to the previous highs. It's obviously, as always, it's never a given, but that is one plausible outcome that I believe may indeed happen. If not, then we are looking at the very, very sort of short cycle retest and continuation, which will happen over the course of 24 hours, one or the other. Obviously, the preferred option is for the first one to take place, because then that's going to be able to allow us to get in earlier and gather some more profits as a result. But ultimately, we're going to be prepared to take whatever the market gives us on that one. But gold this week looking very good at where it's currently situated. Back up to the US 30 Dow Jones this week, which is taking the limelight for our market trends and opportunities. And it's ultimately a range continuation at the moment, team. I mean, we've been ranging for a while. The all-time high level is doing very well at keeping price at bay. Possible outcome is for the continuation, for trend continuation to take place, which is obviously always going to be the favorable one. But range continuation is possible from here as well. We're actually trading right bang in the range median at the moment, which means we could drop down first to this point down below, or we could rally first to the point up above. I am expecting one more wave continuation at least before we get going, and that is simply because of the fundamentals that are kicking off this week. Now, I don't recall. Let me just go to Trading View. I can't remember if it's Tuesday or Wednesday. Usually it's a Tuesday. Is it a Tuesday? It is. No, it's not. No, it's not. Is it a Wednesday? My God, no, it's a Thursday. Bloody hell, it's a Thursday this week. So cool. So the inflation rates for the USA are out on Thursday this week. I beg your pardon. So with the US 30 Dow Jones, we are most definitely going to be waiting for that to take place before we get the breakout of liquidity above here and we get the trend continuation. That's going to happen. So I think we've got even more time actually to see the range continue and maybe get one wave to two waves. I mean, these ranges, I mean, they can complete in one daily candle. So if, we're looking at Thursday for the CPI for it to take place, that's going to be a few days. So we definitely are going to see another continuation of the range before that time, I should imagine. I've got my thoughts down there as well, especially from a fundamental point of view. Now, looking over here at the GA at the moment, really nice point of inflection. The price is trading down to at the moment. We did get a break close and a retest. It is looking like it wants to come down and retest those lows. But I think it's going to be a wonderful place to consider a buyback if indeed we do get that opportunity. We're going to be watching out for our break of structure points on this one to consider the buyback back up to the range median. Again, this is another range play, but the daily time frame, this is a very, very significant range. You could certainly be able to ascertain multiple trends and channels that are forming within the broader range on this daily chart. So we're going to be doing that definitely and looking to get in on this one and take the asset value back to the median, I would say, hopefully. And then finally, to tie it up, we come down here, we've got natural gas. Now, we did miss the beat on natural gas last week. The opportunity was there, but I just didn't take it. That was between the break and structure point down below and the point up here. So that was a really nice run. From that point in time, though, the wind is still in natural gas sales and it's doing very, very well. So this week, we are looking at either the rejection of this level for a price action retest of big liquidity before it continues to trade higher, or this week is in fact going to hold the opportunity we've been waiting for, and we get the break close retest of this structural point and then the continuation immediately. So again, it's just kind of a waiting phase. And so we're going to have to wait and see if the market wants to break out first or if it's going to take a couple of days to do it. But the wind is in natural gas sales. It's certainly getting some steam again. And as we, obviously not quite yet, but as we approach the colder season, we would like to think that the demand cycle is going to start kicking in again. And we'll see natural gas prices starting to rally, which is where we can make some money. So onwards then, down we have market challenges this week. I think everyone's pretty damn clear on where they should be with the market challenges. US PPI, US core inflation and base inflation rates. The algorithm at the moment is chucking out a 4 for the US PPI, so not huge, but it's definitely going to impact prices somewhat of what we've got going on up here. But we do have a 7 and 8 for core inflation and base inflation up here. So that's going to be pretty impactful to what we are looking at in terms of our trading assets this week. So do be aware of that. Wednesday, US PPI, Thursday, inflation. It's going to be a big one. Going down into state structure volatility, then it's all pretty even across the board. The only notable call out is gold, which has actually had a 20% rise in commercial interest. Okay, so the 20% of commercial shorts are actually chucked out and in favor of commercial longs. It's quite a big one. So you can imagine there's a lot of long liquidity in gold at the moment. Chances are we're probably going to get some decent trend continuation, but they will also be holding tight for this week's inflation as well. So please don't forget about it. I'm going to be streaming it live inside the trading community, so please be aware of that one. And we'll have some fun doing some live trading on that, I'm sure. So moving down then into the third and final page of this week's economic report, we've got the economic and order book impact report here. So broad market scale, the details don't really change this week. US PPI actually raised a tick, so that's actually a 5 out of 10, and we've got US core and base inflation rates both measuring an 8. Interesting, considering CPI is usually a 9 or a 10, historically speaking. Not quite as big as the others, but still, make no mistake, an 8 out of 10 is very, very significant, and the market impact that that's going to provide is going to be big enough to knock you out of anything if you're not risked appropriately. So just beware. Moving down into the multi-asset impact gauge, in terms of what we've got knocking around, I mean, it's going to be pretty balanced. 25% equities, 25% commodity, 10% commodities, 25% in the indices markets, and then the Forex market taking the 30th percentile. Over in the money flow trends, again, no real notable call outs. There's not been any real major shifts in market sentiment, commercial and non-commercial money there. So again, there's nothing really to say about that one at this time. Equities in focus this week, pretty good. Plug Power has taken the spotlight equity of the week yet again. It's just looking great, and there's so much money going into it at the moment. So please do check that one out. And then finally, institutional buying interest by sector. We've had 2.1 billion money inflow in tech, 1.4 inflow in energy. Financials have actually had $900 million from last week, and healthcare has had $700 million of inflow as well since last week. So some pretty big numbers being thrown around there. Definitely technologies, it usually takes the limelight, right? We're in the tech phase right now, so that's it's not really too surprising. The financials is the one that wasn't on the previous market report, and that's had 900 million of inflows. So maybe something in there. Possibly look at financial ETFs, a lot of financial firms, especially in the States. I'd probably look at the States more than anything for that, to see if there's any potential ETF opportunities or equity opportunities that you might want to look at over the course of the next, I would say, 4 weeks as a rough time period. Buy in now opportunity, get out in 4 weeks time. Just as a rough idea there. And that's pretty much it, team. So please remember that the information provided in the market report is for informational and educational purposes only, and should not be considered as financial advice or recommended to trade or invest. Please read the full thing down there at your own leisure. So now we will break down the US indices. That's pretty much it for the market report. There's loads in there. If you haven't done so already, please feel free to go and download your own copy of that. It is in the My Report channel inside the trading community. And remember that those of you on the outside, on the YouTube front, you can easily subscribe on the basic tier for free and come in and download the report whenever you wish. There's no strings attached. There's no paywalls or any bullshit. So please feel free to come and check that out. So let's get into the charts then, team. Let me close that down, and we will fire up TradingView and get ready for our first trading session of the week. Right, there we go. So first thing on the list, US 30 Dow Jones, trading within this absolutely magnificent range that it is at the moment. I say magnificent, we're still trading currently in the median of the range, which means we've got decent margin on the upside and the downside here. The downside of that is, no pun intended, is the fact that the margins are quite wide. So we're still looking at relatively intraday style trading opportunities on a Monday. That's not ideal. Usually you would look at the sort of wider targets coming into play on a Wednesday or Thursday, middle of the week. But it is what it is. So we're going to be looking at that as a break of structure for this afternoon. There isn't anywhere other than up at the highs where I would really want to take the trade. I mean, we've got other opportunities, we've got this area in here, which is a pretty, I'd say like a semi-decent point of structure. So you can use that if you want to get in and out of the market at haste. But ultimately, the move up to 45.72 makes perfect sense if you're taking the long after here. But again, if you want to get in and out of the market, you want to be quick in what you're doing, then you're going to be looking at around there. 45.62 is the point of exit. Your entry, of course, past this area here at around 45.55.40, and then you're going to have your stop loss at about the 50% point down below that. So from there through the breaker structure into big liquidity, and you're still going to be looking at around a 1 to 2.8 as a result of that. So that's actually a really nice trading opportunity there. Now, the median itself is worth trading. The margin is there. FYI, thanks to Jack's request, we are going to be doing a workshop this week on Wednesday, and it is going to be on trading margins and availability. So, how do we ascertain what is a trading opportunity? When is it worth it? When is it not worth it? And, mapping out the margins appropriately. So that's going to be on Wednesday afternoon. Please yeah, please schedule it in if you haven't done so already, and yeah, stay tuned for it. So looking at the breaker structure point at the moment for the short, I mean, it's going to be a bit risky because of where the market is. We haven't got too much time before the market actually dips down below this point, instantly triggering a trade, but we're not going to be able to take it, obviously, until after the market bell rings. That right there is a solid trading opportunity, so please be aware you can take the short between these 2 points here with your stop loss. Ultimately, I mean, where it's already placed it, to be honest, a 1 to 2.5 is absolutely perfect there. Just remember that this is not a pre-market trading opportunity. If it comes down here before the market bell rings this afternoon, then it's just tough cookies. You're going to have to look for a delayed entry if you want. I'm not. I'm only going to be looking at this short so long as the market stays trading above this area until the until the bell rings this afternoon. But that's pretty much the breakdown of the US 30 Dow Jones and where it is at the moment. I am not going to be in the realm of flow if the market if the market drops down. I'm not going to be interested in shorting it anywhere past 45.40 today. It's just not for me. So I'm going to wait until tomorrow, wait for volume to pick up. I'm in the US 30 Dow Jones at the moment. 42.67k volume. It's not a great deal, not in comparison to the NAS. The S&P is even worse than that. The NAS 100 is doing okay, so we're certainly going to be considering this, but volume's pretty low on the other two. So, but yeah, US 30 Dow at the moment. That's your short. That's your long. So we'll take a picture of that one for you. And then into the US tech stocks for this afternoon. Let's go up on the 15-minute time frame, check things out quickly. We've got a period of consolidation and range here at the moment, right? We've got this sort of up and downs going on. I got this area in here. So let's just drag that along there to the right. So we certainly got a workable margin on the top, don't we? That's pretty nice. I like that. And of course, we cannot discount that one there at the lows either. So, I mean, the NAS 100 is looking great, team. Actually, it's looking really, really good today. Beautiful area of consolidation. Really nice, realistic proposed long and short, both available. I would say that the TRF on the short is a little bit worrying, but yeah, that's perfect. Yeah, so we do have a TRF. It's not worrying. Worrying is the wrong word. Sorry, I shouldn't have used that word. It's not worrying at all. It's just something to be aware of. So we do have a TRF here, okay? So for those of you maybe a little bit dusty, that TRF is technical risk factor. Okay, and these are the sort of areas in the chart here where we can see liquidity change hands, but it's not been the primary point of inflection. So, for example, in here we have primary point 1, we have primary point 2. Okay, so we know that the change of hands happens up here. We know that it happens down here. Commercial interest is rampant at these 2 points. In the middle is all noise, but we like the continuation, the steady continuation. We should imagine, looking at these 2 points now, that the market's probably going to rise today, and we're going to end the day up at around 23.86 or above. But if it does drop down short, we do have to be aware that the market has been ranging in here for a little while. Because if the market comes down there, it could very well do that again, and we could be stuck in the trade for a little while. The worst case scenario is it rejects that level and it comes back up, we get stopped out. But of course, risking 0.25%, what does it matter anyway? That's what you've got to tell yourself. What does it matter anyway? Because it doesn't. So what we're going to be planning for this afternoon then, breaker structure on the floor. We're going to be looking at the entry at around 23.68, targeting down at the lows there, 23.56. We don't want to be going to the primary point of inflection. That's greedy. This is the realistic area. We'll be working out things like this as well, just built into the workshop on Wednesday, but why I choose this over this. For those of you inside the room right now, obviously you spend a great deal of time with me, so you'll be more, up to speed and well equipped to understand why we would choose this level and not this one. But that's what we're doing. The stop loss for this one's going to be at the 50% point between the two margins in the middle here, which is acting as our NML, which is no man's land. So now we've built ourselves a 1 to 2.64 trading opportunity with a net return upon completion, so long as it's successful, of around 0.7, maybe a 0.65, 0.7 return. So not bad at all, team. Not bad at all. Not for a Monday. And we're going to do the exact same process on the top side. So we're going to look at entry, a little margin above the structural point. We're going to have our target profit just beneath the not the all-time high. Actually, yes, no, not the all-time high. We're going to look at the target there, just underneath the previous high. And the stop loss is equally going to be at about that 50% point between the two margins. That's showing a 1 to 1.93 at the moment. However, we're going to scale down to the 1 minute time frame, look at the finer detail of things, and we can see that the margin above is actually quite significant, isn't it? Right? On both trade ideas. So there's going to be some quids to save here. So what we're looking at here is actually bringing down that entry to the margin above. We're actually going to be bringing the stop loss up a little bit. That's going to be a 1 to 2.3. This one here, just bring that up just a touch, drop the stop loss down just a touch, fine tune the trade, and that one's going to be a 1 to 2.9. So we've got a 1 to 2.3 and a 1 to 2.9 available in US tech stocks for this afternoon. Excuse me, which is fantastic. I'm really liking these NAS 100 setups. Not bad at all. Now with the S&P 500, to be fair, team, I'm probably going to dodge the S&P this afternoon. 12.64k in active trading volumes at the moment on the broker supply that I use for the S&P. It's not great. It's not great. The setup is very much the same as the NAS 100, very different than the US 30 Dow. There's more of a TRF in the S&P on the long side as well as the short side. So there's TRFs on both sides of the chart. It's just not quite the same. It's not as good as a setup as the NAS 100. And frankly, I don't want to be, shoving out 3 trading indices for you all today. Keep things nice and streamlined, simple as possible. That's what we should be doing. So that's that. So are there any questions then? Questions can be about anything. They can be about something on the market report as well. As long as we have a clear plan in mind for this afternoon's US Open, which we do, we should be good. No problem at all, Cora Tim. No problem at all, Nadia. You're most welcome. That's fine. Hey, Asif. Yeah, no problem at all, buddy. Yep, no worries. That's fine. Jack, why don't you trade US stock pre-market trades? So it's not that I don't trade it. It's not that I don't trade it at all. In fact, pre-market trading is actually part of the broader system, the broader way that we do trade. But I find pre-market trading needs an appropriate level of care that I cannot provide in real time to you guys. Excuse me. So if I were to start doing pre-market trading, I would need to start streaming earlier every day, and I cannot do that with my work commitments at the moment. It's not. I'm not saying that you guys can't do it behind the scenes and take ownership of that part of the process, of course. But I would end up being from 12:30 until 2:15, 2:40, 2:20, which is when I usually would end a stream from Tuesday to Friday, Tuesday to Thursday, whatever. And that's a bit long, and I can't afford that with everything else that I've got to do at the moment. So pre-market trading is not a process that that I choose not to do actively. It's just time doesn't afford it to me at the moment. But I will certainly be getting back there. Also, the equities markets do a lot of pre-trading in that one. Pre-market trading, it's definitely an equities thing more than an indices thing, I would say. Ultimately, if you trade a US indice anytime before 2:30, it's pre-market trading. But there's no real the US opens up at 2:30, but US indices CFD markets nowadays, they're running constantly. So it's what's the word that I'm looking for? It's kind of it's a bit of a novelty thing, I suppose, rather than the equity markets, which literally are closed until 2:30. That's a bit of a different game. But ultimately, Jack, it's time constraints, mate. That's what it comes down to. Yeah, no worries. No worries. Right, team. So I'm going to wrap things up there then. I hope you all have a fantastic day today out there in the US Open. Good luck. Take it easy. Remember, first day back after the weekend. We're usually a little bit slow. The markets also can be very temperamental. There's a lot of things against us on a Monday morning or a Monday, Monday in general. So just take it easy out there. I think we've got a really good plan of action for this afternoon session. The margins are there for us. Everything's looking pretty good. Of course, the market's going to do what it wants to do. It might not move a muscle. For those of you out there on YouTube at the moment, I hope you also have a really fantastic trading week this week. Good luck to you all out there. If you want to come and check us out inside the trading room, please feel free to do though. You can sign up literally, like I say, there's no paywalls or anything like that. If you want to take it to the next level, you want daily insights like this, then of course that's your prerogative, that's your choice. But you can just join the community for free and grab your copy of this week's market report and all subsequent copies as well. So take care, everybody. I hope you have a great one, and I look forward to hearing how it goes later on this afternoon. So take care, and I'll see you then. Bye bye.